If you've been following the crypto market lately, you've probably heard whispers about the next Bitcoin halving. Every 4 years, this one event has the power to shake up the entire crypto ecosystem, and if history repeats itself, we might be staring at another massive opportunity in the making. So today at Elite Trade Club, I'm breaking down exactly what Bitcoin halving means, why it's such a big deal, and most importantly, 3 crypto stocks you'll definitely want to keep on your radar as we move toward the next halving cycle. Let's dive right in. Bitcoin halving 101. Alright, so let's start from the top. What even is Bitcoin halving? In simple terms, Bitcoin's halving is like a built-in supply shock. Roughly every 210,000 blocks, which works out to about every 4 years, the reward that miners earn for creating new Bitcoin blocks gets cut in half. That's right, overnight, miners start earning 50% fewer Bitcoins for doing the same amount of work. Why would anyone design a system like that? Well, that's actually one of Bitcoin's most brilliant features. It's coded into the network itself, a pre-scheduled event that controls inflation and keeps Bitcoin scarce, kind of like a digital gold. When supply slows down but demand stays strong, prices tend to rise. We've seen this pattern play out over and over again. In 2012, Bitcoin's price exploded after the first halving. In 2016, Bitcoin sat around $500 before the halving, but not long after, it skyrocketed into the thousands. The 2020 halving kicked off another massive run. Bitcoin went from about $9,000 to almost $60,000 by mid-2021. The most recent halving happened in April 2024, and while we're still early in that cycle, history tells us this next phase could be wild. The next halving is expected around 2028, but here's the kicker. Markets don't wait. Investors, traders, and institutions start positioning themselves well in advance, and that's exactly why now is the time to pay attention. Why the Bitcoin halving matters. Here's the easiest way to think about it. Imagine a gold mine where every 4 years, half the gold veins just vanish overnight. Same demand, half the new supply. Naturally, the remaining gold, or in this case, Bitcoin, becomes more valuable. This supply shock doesn't just affect Bitcoin itself. It also sends ripple effects through the broader crypto stock market, especially for companies that are directly tied to Bitcoin mining or trading. That's why today, I'm spotlighting 3 companies that could benefit massively from the next halving cycle. Hut8 Corp, HUT, bitfarms Limited, BITF, and Coinbase Global, Coin. 2 of these are Bitcoin miners, the ones actually producing BTC, and the third is the biggest exchange in the US, which profits when trading volumes surge. Let's break each of them down. Hut8 Corp. Hut. Let's start with Hut8, one of the biggest mining companies in North America. They're listed on both the NASDAQ and the Toronto Stock Exchange, and they operate massive data centers across Canada and the US. What sets Hut8 apart is simple. They don't just mine Bitcoin, they hoard it. They believe in the long game. As of Q2 2025, Hut8 held around 10,667 Bitcoin, worth roughly $1.1 billion. That means they're sitting on unrealized profits of almost 2,800%. That's not just a holding, it's a treasure chest. Now, when you look at their financials, the story gets even better. In Q2 2025, Hut8 reported about $41 million in revenue and a whopping $137 million in net income. Their adjusted EBITDA came in over $220 million. For a company in crypto mining, that's impressive. Their market cap is around $4.13 billion. So how does the halving fit in? Simple. When Bitcoin supply gets cut in half, each new coin Hut8 mines becomes twice as scarce and potentially twice as valuable. Plus, the 10,000 plus Bitcoins they already hold on their balance sheet, those could skyrocket in value if Bitcoin rallies post-halving, just like it did in previous cycles. In other words, Hut8 is basically sitting on a spring that's ready to coil. Bitfarms Limited, BITF. Next up, we've got Bitfarms, another major Canadian Bitcoin miner traded on both NASDAQ and TSX under the ticker BITF. Now, Bitfarms takes a slightly different approach from Hut8. They're known for using renewable hydroelectric power to run their mining farms, mainly across North and South America. That gives them one of the lowest energy costs among all public miners, which is a huge advantage in this energy-intensive business. In Q2 2025, Bitfarms produced around 718 Bitcoin, and as of August 2025, they were holding around 1,402 Bitcoins. They've strategically sold some of their holdings, especially when Bitcoin hit around $95,000, to fund expansion and infrastructure upgrades. Revenue-wise, they posted $78 million for Q2 2025. That's up about 87% year over year. They're still operating at a net loss, about negative $29 million, mainly because of expansion costs and some impairments, but that's not unusual for growth phase mining companies. Their market cap sits around $2 billion, and they last traded at $3.94, making it an affordable play for small investors looking to ride the crypto wave. Here's the exciting part. Bitfarms recently launched a share buyback program, scooping up roughly 10% of their outstanding shares at around $1.24 each. That's a strong signal for management. They clearly think the stock is undervalued. Now, why does the halving matter here? Because just like Hut 8, Bitfarms earns revenue directly from mining Bitcoin. Once the halving hits, their mining reward gets cut in half, but historically, Bitcoin's price tends to surge after halving events, more than offsetting the lower reward. So if Bitcoin takes off again in 2026 to 2028, Bitfarms could see not just higher profit margins, but also big gains in the value of its Bitcoin reserve. Plus, with its renewable energy model, it's positioning itself for long-term sustainability. A big plus as regulators and investors grow more climate conscious. Coinbase Global. Coin. Now let's shift gears from miners to the marketplace. Coinbase Global. If you've ever bought or sold crypto in the US, there's a good chance you've used Coinbase. They're the largest US-based crypto exchange, serving both retail traders and big institutional clients. Coinbase doesn't mine Bitcoin, but here's what makes them interesting. Their business thrives on activity. Whenever crypto prices move up or down, people trade, and Coinbase earns fees. So what happens during and after a Bitcoin halving? Prices rise, volatility spikes, and trading volumes go through the roof. And guess who benefits the most? Yep, Coinbase. In Q2 2025, Coinbase reported a staggering $1.5 billion in revenue and $1.4 billion in net income. A lot of that came from strong trading activity and some strategic crypto investments. Their trading revenue alone hit $764 million, and their subscription and service business continues to grow. On top of that, Coinbase holds around $1.8 billion worth of crypto assets on its balance sheet, meaning it also gets direct exposure to Bitcoin's price. Their market cap sits between $80 and $90 billion, making them the heavy hitter of this list. So, while you wouldn't call Coinbase a cheap stock, it's still one of the most powerful ways to get regulated exposure to the crypto market. If Bitcoin rallies after the next halving, and if the same flood of retail and institutional money returns, Coinbase could see a surge in both trading volume and revenue. Think of it as the picks and shovels play of the crypto world. When everyone rushes to mine gold, the folks selling the shovels make a fortune. Why these stocks stand out? Hut 8 and Bitfarms are pure Bitcoin miners, directly tied to the price of BTC. They benefit from scarcity, price rallies, and treasury growth. Coinbase is the market facilitator. It wins when crypto enthusiasm returns and trading volume explodes. Together, they give a balanced way to play the next halving cycle, with miners offering high leverage to Bitcoin's price and Coinbase adding stability and exposure to market growth. Bitfarms trades for under $5, which could make it appealing to smaller investors, whereas Hut 8, trading in the $30 to $40 range, represents a bigger, more established bet on Bitcoin mining with a market cap of over $4 billion. That gives smaller investors a low-cost entry point into crypto-linked equities without having to buy Bitcoin directly. Of course, none of this is financial advice. Always do your own research before investing, but understanding how the halving impacts these companies can give you a serious edge. Final thoughts and key takeaways. So here's the summary. The Bitcoin halving is a pre-programmed supply shock that makes Bitcoin scarcer every 4 years. Historically, each halving has led to major bull runs in Bitcoin's price. Companies like Hut 8 and Bitfarms directly benefit because they mine and hold Bitcoin. Coinbase benefits indirectly because it earns more when people are excited and trading crypto. If history repeats again, these stocks could see major upside as we approach the 2028 halving. So there you have it, the next Bitcoin halving and 3 crypto stocks that I'm personally keeping a very close eye on. If you found this breakdown helpful, don't forget to hit that like button, subscribe to Elite Trade Club, and turn on notifications because we'll be diving deeper into crypto cycles, altcoin strategies, and new opportunities every week. Final note, this isn't financial advice, it's an educational example of a famous portfolio strategy. Every investment carries risk, so always do your own research or consult a professional before making moves. Thanks for watching, and as always, stay curious, stay sharp, and I'll catch you in the next one.